President Trump also appeared during the Super Bowl pregame Sunday in an interview with Fox News Channel's Bill O'Reilly and discussed when he thinks tax reform will get done.
Americans expect a tax cut.
I think so, yes, and I think before the end of the year I would like to say yes.
Okay. Can Americans in 2017 expect a new health care plan rolled out by the Trump administration this year?
Yeah, in the process, and maybe it'll take till sometime into next year, but we are certainly going to be in the process.
All right, joining us now on our closing bell exchange with their thoughts on what impact this could have on investing strategies, we have David Waddell from Waddell & Associates, Stephen Sarge Guilfoyle of TheStreet.com and Sarge 986 LLC, our very own Rick Santelli at the CME in Chicago as well. Stephen, I'll go to you, and it really plays off the comments that the president made over the weekend. Are investors too bullish on the timing of the agenda, and has the market gone up too far too fast?
The market has rallied quickly, but as a trader, you have to become somewhat mercenary in nature. You have to ignore items that prolong the agenda. You have to grasp onto items that aid the agenda. Lowering taxes sometime this year, deregulation maybe this year that will push a fiscal policy forward with the tax benefits from that. Yeah, that's going to help everything from finance to some techs to the military, to the defense stocks, to the infrastructure stocks. Now, otherwise, healthcare maybe pushed off into 2018. Maybe you just don't go there right now.
In the healthcare space, you mean?
Right. Maybe you avoid healthcare.
David, what about you? I mean, you know, the timing here of tax reform relative to healthcare, how does that affect the way you'd invest right now?
Well, I'm not sure it affects the way we invest. As somebody said, I think, just briefly before we came on air, the market's trended sideways since about December 9th. I'm actually highly encouraged that people have gotten as cautious and fearful as they have. In fact, investor sentiment's come down 30% since Inauguration Day, and the market's flat. I view that as a sign of strength. So, yeah, I think people are projecting tax reform probably sooner than it'll occur. Let's not forget, it's been 30 years since we've had tax reform, and it took 3 years to pass the last bill. And by the way, if you read through the Better Way proposal from the House, Paul Ryan's pretty explicit about the fact that we've got to get rid of Obamacare to make it deficit neutral. So you've got a little delay there, which I think is messing up the messaging. Also, the border adjustment tax is a centerpiece of the bill, and most of us don't really know what that is. Harmonizing with VATs isn't something we've talked about in the past. Plus, the Senate, you've only got 52 votes, and Orrin Hatch kind of likes bipartisan activity. So there are impediments here that we haven't really focused on because we've all been so excited about the Christmas present of tax reform.
So, Rick, on that note, right, Goldman had a note out today that appeared to be more cautious on their outlook for the market because they say there's a more polarizing environment. There's going to be this bitter fight over Obamacare. You've got these potential border and trade issues with the president. And it's not any different from really your conversation this morning with Charles Biederman, who wondered whether investors are getting a little ahead of themselves, even though the policies they're banking on are pro-growth, are pro-economy, are pro-market.
You know, and I'll say the same thing I said to Charles, and everybody's entitled to their own opinion. I think we have a populist president, and many make fun of the population that put him in office. We have an investor class that still has a 20 handle on stocks, and we somehow say, well, they're just not real bright. They obviously can't possibly understand all the log jamming that goes into politics and all the sausage factory activities that are going to be coming to fruition as we get closer to getting some of these things done. And I think they do understand. I think the fact that we have these policies in the crosshairs is what's important to investors. I think the timing, like get it done yesterday, is more something the media has created personally.
No, but look, I mean, I'll push back on that, though, because maybe the timing just isn't going to be as fast as people think. What does that have to do with understanding anything? It's a simple fact of if the president wants tax reform and people were banking on it for 2017 and the president himself says, well, maybe it's not going to happen until 2018, why is that not a legitimate question to raise with people who are investing in the marketplace, as if some of these policies, as great as they could be, are going to happen in a couple of weeks or months?
Well, the investors have weighed in, Scott. I see 20,046. That's them weighing in. I don't see them weighing out, do you?
I don't see people
Rick,
selling, but I think people... Go ahead.
Can I jump in on that? Let me jump in on that. So let's just project out until 12/31/2018. Right now, FactSet thinks earnings will be 25% higher, and that number doesn't bake in any tax reform. It doesn't bake in any deregulation, doesn't bake in any repatriation. So let me ask you, do you think it's possible, and yes, maybe they've got rose-colored glasses on, discount that a little, that earnings could be 20% higher by the end of 2018? If the answer is yes, then the markets are likely going higher. Trying to figure out while we're going through this political acclimation season when to get in, to me, is futile. I want to own stocks now because of what I expect by 12/31/18.
So then why did the market start this earlier? I haven't seen any data that looks like we turned some major corner in November other than the election.
Sarge, you want to weigh in on that?
I mean, just look at the GDP for the fourth quarter or for the full year. The economy did not turn a corner. This is based on what people perceive as a growth agenda. And I do think we're going to see that. I think if we can maintain 17 to 17.25 times earnings, I think you're going to see something in the 2400s on the S&P 500 sometime this year. And let's not forget, what are there, only 3,700 stocks left in the universe? Well, there's a scarcity, so valuations should be higher.
No, it's funny you point that. Even J.P. Morgan was saying over the weekend that there was there wasn't enough new supply of equities last year just to match, what the traditional replenishment cycle. I was going to ask you about something kind of related to that, which is about the Fed getting a little bit more focused now about their balance sheet. The duration shortening and what happens with mortgage bonds, and there's some tightening that it seems going on there while all this is happening.
I actually believe they should have stopped reinvesting before they even started raising rates this time around. I think that was the logical first step, because that's easily reversible if you realize you made a mistake.
What were you saying, David? Last word?
Yeah, I agree with that, and it also would have helped.
I think they should stop reinvesting. Yeah, go on, David.
Yeah, I agree with that. I agree with that, and it'll help steepen the yield curve, which is good for everybody.
All right.
Indeed.
Gentlemen, thank you all for joining us. David Waddell, Sarge, Rick Santelli. Good to see you this afternoon. We have a